All right. Welcome back, everyone. Today we're going deep on something that hits close to home for a lot of us, I think. UK inheritance tax.
Ooh, yeah.
It might not be the most exciting topic, but these changes coming in 2024 are a big deal. They could really impact what you can pass on to your family.
Absolutely. And that's what we're here to break down.
Right. We're looking at this blog post from MA and CO accountants.
Yeah, they're accountants, so they know their stuff.
Yeah, they really lay out how these loopholes are closing, and the new rules they're putting in place could really shake things up.
Like a total overhaul of UK inheritance tax.
Right, it's not just like fiddling around the edges.
No, it's the whole system.
So they break it down into 5 key areas.
Hit me with them.
Okay, so we've got gifts, trusts, dot property, business relief, and then just like a general ramp up in how HMRC is enforcing all this. Like they're really coming after it.
HMRC needs business.
Yeah, they do.
And you know what's interesting about all these changes?
What's that?
It's not just the super rich who need to pay attention. Anyone planning to pass on any assets really needs to be aware of this.
So whether it's your family home, savings, even like valuable possessions, you know?
It comes into play.
Exactly. So let's start with gifts. You know that 7-year rule everyone talks about?
Oh, yeah. Give a gift, survive 7 years, and it's tax-free.
Right? Seems pretty straightforward.
Well, not so fast.
Uh-oh.
These 2024 changes, they're messing with that simplicity,
What do you mean?
that exemption period.
Yeah.
It could be shortened.
So those gifts might become taxable a lot sooner than you thought.
Exactly.
Oh, man, that could really catch people off guard. Like, imagine you gave a big gift a few years back, thinking you were in the clear.
And suddenly, bam.
Yeah, HMRC comes knocking.
Exactly. The rules change, and now you owe taxes.
The blog post actually gives an example. Say you gifted someone £300,000 back in 2023.
Okay.
Under the old rules, you'd be celebrating after 7 years, tax-free.
Right.
But with these new regulations, a chunk of that could be taxable.
It makes you wonder what the government's thinking here. Is it just about getting more tax money?
Right? Or is there something more to it?
Like fairness or something?
Yeah, something about how wealth is distributed.
It's a good question. We'll have to see how it all plays out.
Definitely.
But for our listeners out there, pay attention to these gifting changes.
Absolutely, they're crucial.
Okay, so moving on. Let's talk about property inheritance.
Okay, so property.
Yeah, you know, in the past, there were ways to, let's just say, be strategic about reducing inheritance tax on property.
I see where you're going with this.
But those loopholes, they're closing fast.
HMRC is cracking down.
Yeah, it sounds like they're getting much stricter with property valuations to stop people undervaluing things.
So no more sneaky tactics.
Nope. Which means anyone inheriting real estate could be facing bigger tax bills.
That's right.
And that primary residence relief
Yeah.
that some people use to lower their taxes.
Yeah, what about that?
It sounds like that might become a lot harder to claim.
Oh, that's going to hurt.
Yeah, these changes could have a big impact.
Big time.
The blog post gives a really stark example.
Lay it on me. Imagine you inherit a property worth £1 million.
Okay, £1 million.
Under these new rules, you could be looking at an extra 10% in tax.
So that's like
An extra £100,000 added to your bill.
Oof, that's a hefty chunk of change.
It is. It really shows how important it is to understand these new rules and plan carefully.
Yeah, you gotta be on top of this stuff.
Yeah, no kidding.
And it's a good reminder that getting professional advice is more important than ever.
Right.
It's complicated stuff.
Yeah.
Property law and tax regulations.
That's a whole world.
Exactly. A qualified advisor can help you make sense of it all and come up with a plan that protects you.
Okay, so next up we've got trusts. These have been a popular way to manage wealth and maybe even lower your inheritance tax bill.
Yeah, but hold on tight.
What's happening?
The 2024 changes. They're putting trusts under a microscope.
Like HMRC is really scrutinizing them.
Sub 10.
Okay, so for our listeners who might not be familiar with trusts,
Right.
Can you give us a quick rundown?
Sure. So basically a trust is a legal arrangement where a third party, called the trustee, manages assets for someone else. The beneficiary.
Okay.
It can get complicated. But the main point is trust can be used to control how and when assets are distributed,
I see.
and that can potentially reduce inheritance tax.
So what's changing with trusts? The blog post mentioned something about increased taxation on discretionary trusts.
Yeah, discretionary trusts.
Yeah.
That's where the trustee has flexibility in deciding how to distribute the assets.
Right.
So they're going to be taxed more heavily.
Okay. And there was something about higher periodic charges on trusts, too.
Right. Those are recurring taxes on the assets in the trust.
So it's like you're paying taxes on top of taxes.
Essentially.
And then on top of all that,
Yeah.
there are even more reporting obligations for trusts.
HMRC wants to know everything.
They want full transparency.
That's right.
So it seems like HMRC is really cracking down on trusts.
Absolutely.
So if you're using trusts in your financial planning,
Now's the time to take a close look.
yeah, you might need to adjust your strategy.
Don't wait until it's too late.
Always better to be proactive.
Couldn't agree more.
Okay, so while we're talking about potential tax advantages, let's move on to business relief, specifically business property relief, or BPR.
Ah, yes, BPR.
This has been a lifesaver for a lot of family businesses, offering big reductions in inheritance tax.
Yeah, but as you might expect.
Here come the 2024 changes.
Right on cue.
So the blog post highlights a few key things. First, stricter eligibility rules, meaning fewer businesses might qualify for BPR in the future.
Oh, wow.
Yeah. Second, reduced tax advantages for certain business structures.
So it really matters how your business is set up.
Exactly.
Yeah.
You need to make sure you're still getting the most benefit.
Got it.
And third, more compliance and reporting requirements for BPR.
HMRC is all over this.
Yeah, they want to know everything.
Total transparency.
So the message is clear. If you own a family business, don't wait. Review your structure now.
Make sure you still qualify for BPR.
And that you're meeting all the new requirements.
Those changes are coming ready or not.
Be prepared or face the consequences.
Words to live by.
Okay, so we've covered a lot of ground here.
A lot of info.
It's a lot to take in. But don't worry. We're here to help you make sense of it all. Let's take a closer look at what HMRC is doing with enforcement.
Okay, because this is where it gets interesting.
Yeah, things are about to get real.
Remember those stats we talked about with HMRC increasing inheritance tax audits?
Yeah, like 25% more audits or something?
Right, 25% more. And it's not just the number of audits, it's how they're doing them.
Oh, what do you mean?
They're using technology to track wealth and find those little discrepancies.
Like some kind of financial big brother?
Not quite that extreme.
Okay, good.
But they are using some pretty sophisticated data analysis tools. They can cross-reference info from different sources, like property records.
Bank accounts.
Exactly, even social media.
Wow, so they're really building a complete picture of your finances.
They are. It's all about getting that 360-degree view.
So if you're trying to hide assets or underreport your income,
HMRC is more likely to catch you now.
makes sense.
And it's not just limited to the UK either.
Oh, really?
They're really focused on offshore tax compliance.
So if you have assets overseas, you better make sure everything is declared properly.
Absolutely. Dot your I's and cross your T's.
So the message is clear. Transparency and compliance are key.
No two ways about it.
But with all these changes and HMRC breathing down our necks, it's easy to feel overwhelmed.
I get it. It's a lot.
So what can our listeners do? How can they navigate all this and make sure they're on the right side of the law?
Well, that's where the advice from MANCO accountants comes in.
Okay, what do they say?
First and foremost, reassess your estate plans.
Okay.
And they really emphasize this. Don't try to DIY it.
Yeah, get some help.
Exactly. Talk to a qualified professional, a solicitor, a tax advisor, someone who knows the ropes.
They can help you make informed decisions that work for your specific situation.
Right, and that align with the latest regulations.
So no burying your head in the sand.
Definitely not be proactive.
And speaking of proactive, let's talk about gifting strategies. Remember those changes to the 7-year rule?
Oh yeah, those are big.
So what are some practical steps our listeners can take?
Well, first, make the most of your annual tax-free gifting allowance.
Right. You can give away a certain amount each year without any inheritance tax.
Exactly. It's a simple way to gradually reduce the size of your estate.
It's like a use it or lose it situation.
Exactly.
And what about bigger gifts?
For those, careful planning is crucial. Think about the timing of the gift, the type of asset you're giving, and the potential tax implications for both you and the recipient.
So it's a bit more complicated?
It can be. That's where professional advice comes in handy.
Right. They can help you weigh all the options.
Absolutely.
So it's about finding that balance between being generous and being tax efficient.
Exactly. You want to be smart about it.
And what about those family businesses we talked about?
Ah, yes.
What steps should they be taking to prepare for these inheritance tax changes?
Like we mentioned before, Review your business structure.
Make sure it still works.
Right, make sure you still meet the criteria for business property relief.
And explore any restructuring options that might help with taxes.
Exactly.
So don't just assume everything's fine because it worked in the past.
Yeah, things are changing. You need to adapt.
And compliance is key, too.
Absolutely. Keep good record.
Stay up to date on those HMRC reporting requirements.
HMRC is watching.
Yeah, they are. So compliance might feel like a chore. But it's better than getting in trouble with HMRC.
Agreed. Stay on their good side.
Okay, and let's circle back to HMRC's focus on transparency. They're using all that data analysis to track wealth and find discrepancies.
Right. They're getting pretty good at it.
So even if you think you found a clever way to reduce your inheritance tax,
HMRC might be one step ahead.
it's like playing a game of cat and mouse.
Kind of, but in this game, honesty and transparency are the best strategy.
Yeah, trying to outsmart HMRC is usually a losing battle.
Exactly.
So play by the rules and you'll sleep better at night.
Yeah, definitely less stress in the long run.
Okay, but with all this talk about taxes and compliance, it's easy to lose sight of the bigger picture.
What do you mean?
What are the broader implications of these inheritance tax changes?
That's a great question. And it leads to a really important point.
What's that?
These changes aren't happening in a vacuum.
Okay.
They reflect a broader trend. Governments looking for ways to increase revenue.
They need money.
They do, and inheritance tax is just one piece of the puzzle.
So you're saying we shouldn't just focus on inheritance tax in isolation.
Right.
We need to think about how it fits into the bigger picture of personal finance.
Exactly.
And maybe even anticipate future changes in other areas.
Like what?
I don't know. Capital gains tax? Property taxes?
Right.
Even income tax?
It's all connected.
So we need to be adaptable and stay informed.
Absolutely. The financial landscape is constantly changing.
But before we descend into complete financial doom and gloom, let's bring it back to our listeners. What can they do to navigate all this uncertainty? How can they protect their hard-earned wealth?
Yeah, it can feel a bit overwhelming, like everything's changing all the time.
It really does. Makes you feel like you can't keep up.
But here's the thing. We're not powerless.
Okay, that's good to hear.
Knowledge is power.
Right.
The more you understand about these changes,
Yeah.
the better decisions you can make.
So where should our listeners even start?
Well, MA and CO accountants, in their blog post, they say start by reviewing your current financial plan.
Okay, like a checkup.
Exactly.
So do you have a will? Is it up to date?
Those are the basics.
And have you thought about things like power of attorney?
Advanced healthcare directives.
Right. Those are important, too. They might not be directly about inheritance tax, but they make sure your wishes are followed.
Absolutely. They're crucial.
So once you've got those basics covered, then what?
Then you can start looking at specific strategies.
Yeah.
For wealth preservation and tax mitigation.
Okay, so what kind of strategies are we talking about?
Well, it could be anything from optimizing your gifting strategy
Right, we talked about that.
to exploring different investment options, or even considering a change in residency
Whoa, big move.
if it aligns with your long-term goal.
Well, of course. So it sounds like there's no one-size-fits-all solution?
Exactly.
Yeah.
It's all about your individual circumstances.
And being ready to adapt.
Absolutely.
And that's where getting personalized advice from a professional can really help.
100%. They can guide you through the complexities and help you avoid any pitfalls.
Right.
They can tailor a strategy that works for you.
So don't be afraid to ask for help.
It's not a sign of weakness. It's a sign of smart planning.
I like that.
And remember, you're not alone in this. A lot of people are facing these same challenges.
We're all in this together.
Exactly. And there are resources available, both online and offline.
That can help you stay informed.
Exactly.
So stay curious, stay informed.
And connect with others who are going through the same thing.
It's a community effort.
Absolutely.
And most importantly,
don't panic.
right, easier said than done sometimes.
I know, but these changes, while they are significant, they don't have to derail your plans.
That's the tier.
By being proactive and informed, you can protect your wealth and make sure everything goes smoothly for your loved ones.
That's what it's all about in the end.
Absolutely.
Well said. A big thank you to MA and CO accountants for breaking down these important changes. And to you, our listeners, for joining us on this deep dive into UK inheritance tax. It's been a journey.
It has.
But remember, knowledge is power. And with the right information and guidance, you can face the future with confidence.
You got this.
That's all for today, folks. Thanks for tuning in.